What is going on, my good old friends of YouTube? It's Stas here. Welcome back to another video. So listen up, man. Not the best start to the week for GameStop stock. I'm sure you guys saw it. It went down 12% on the day, and I think at one point it was down 15 to 18%. How down was it? Yeah, about 19% in the red when it hit almost $23 per share. Flat, you guys can see here. We hit that at 12:30 p.m. on the East Coast. So yeah, not the best start to the week, and we're going to break down the charts here, do an update on the options chain, and talk about Roaring Kitty's position, which you guys know, this guy's balls deep. He's all in on GME right now, even though it's down from $67 a couple of days ago. Now it's at what, $24, $25 per share. So we're going to do an update. Hit the like button, make sure to subscribe, and guys, don't forget to get your free stocks from Moomoo and to check out Interactive Brokers. All those links are down below. And with that being said, cheers, guys. Let's dive right into the video. So markets closed about an hour ago, and again, GME went down 12% on the day. At one point, it was down almost 20%, and that's in the midst of an overall pretty nice day for the stock market. You guys can see the Russell went up 0.25%, S&P up around 0.3%, NASDAQ up 0.4%, as the Dow went up around 0.2%, and we had the VIX go up as well, funny enough, over 4% up day, green day for the VIX, and again, GME 12% in the red. It downtrended all day pretty much. Well, actually not all day, but for the first half of the day, it got destroyed. So at one point, we were up around 11% in the pre-market, but obviously that did not last at all. We then downtrended a bit in the pre-market heading into open. Then once the markets open, oh boy, the floodgates of selling opened up. You guys can see we opened up at about $30 per share, and by noon, a little after noon on the East Coast, we were at $23 per share. So we actually dumped down 22% from open to where we hit the low of the day, again being $23 per share. Then we consolidated a bit, and then we ran a bit into close, and now we're up a little bit after the bell, which is a good sign for now. But overall, guys, again, GME is getting squashed, right? So let's break down the charts a little bit more and see what's going on. So again, we hit $67 a couple of days ago. That was on what? Friday morning, or actually no, Thursday after the bell, and now we're at $25. So officially we're down 63% from the highs. And mind you, Roaring Kitty, Keith Gill, he bought 5 million shares at $21 per share, and I think he bought $120,000 contracts, call options that expire on June 21st, the $20 strike price. So pretty much, guys, we're right back down to this guy's average cost, at least on the shares. I'm not sure what the options are looking like quite yet. We'll take a look at those in a couple of minutes, guys, on the options chain, so make sure you all stick on throughout. But holy smokes, man, that position he had, I think, was $600 million at some point, $700 million at one point. Now it's come down big time, right? It's come down big time. So we'll see how that plays out over the coming weeks. But yeah, GME's down big time. Roaring Kitty's position, obviously from the peak, is down big time, but he's actually still up on his position overall, just not up nearly as much as he once was just a couple of days ago. And if we pull up the 20-day chart, guys, now we're starting to go under the 50 and the 180 moving averages. We are slowly starting to break trend. Not horribly, but yes, we are under these moving averages for the first time in about a week to 2 weeks since the end of May. And here on the 4-hour chart, though, look at this. We're actually above the 180 moving average. This still looks pretty decent from a bullish perspective, right? You guys can see if I draw the trend line out, we're making these higher lows pretty clear as day. And as of now, we're holding one right above the 180 moving average, right? So let's see if GME could potentially see another rally off the low mid-20s, maybe back to 30, maybe 40, maybe 50. Who the heck knows where it's going to go, right? But listen, I'm not telling you guys what to do, obviously. Please do your own research. Understand how risky GME is. But if you were willing to buy it at $60, $50 when it was ripping after the bell a couple of days ago, you should be salivating at these prices right now. Now is the time to potentially, not telling you guys what to do, but if you wanted to take a risk, now would be the time to do so, right? As we're consolidating in the low mid-20s, as we've come down 65%, now's the time when everybody's freaking out, everybody's panicking, everybody's selling. Well, maybe not panicking per se, but you guys know what I mean. Now's the time to potentially look at that. Not when we're exploding to 60, 70 bucks after the bell. That would be the time to sell, lock in some profits, right? Now's the time to potentially take the leap, the risk, as we're down massively, right? So let me show you guys this options chain. And again, Roaring Kitty is in the $20 calls that expire on the 21st of June. Not this Friday coming up, but the Friday after that. So let me show you guys what the options chain is looking like. And by the way, hit that like button, man. Run the likes up. Let's try and get at least 100 likes on this video. And of course, if you haven't subscribed yet, make sure to subscribe. I appreciate you all. As always, that helps out the channel, and it obviously grows the channel, which I'm trying to get to 50,000 subs pretty soon here. I appreciate you all for tuning in as always. So take a look. These calls came down big time. Obviously, the June 14th calls got destroyed today, considering that's in only 4 days from now. So we can see these different strike prices, $25.50s, $26, $26.50. All of these got cut in half pretty much today. And if we pull up the ones that Keith Gill is in, Roaring Kitty again, I'm calling him by his government name, guys. Screw it. Keith Gill, he's in the $20 June 21st call options, which today went down 30%. Let me pull these up and show you guys. So these are the ones that he's in right now. I'm not sure if you all can see it, but the ask price right now is $6.90. And from my memory, I think his average cost is what? $5.50, $5.60 per contract. So those got up to like $15, maybe even more per contract from what I saw, right? The ask price, and now we're down to almost where he bought them at. So he's not up hundreds of percent on those call options anymore. Now he's up like what, 20, 30%, which is still good, but obviously not nearly as much as what he was up on paper just a couple of days ago, right? And again, his average cost on the shares are right around $21, $22, something like that. I think $21. So those were up 3x at one point. Now they're up, what, like 20, 30%? Not even. Right around that ballpark, whatever it ends up being, right? But yeah, he's got balls of steel, guys. He's not selling. He's holding on to those shares. The options, a little bit of a different story. He'll probably exercise. We'll see what happens there, guys. There's a couple of theories, but what do you guys think? Let me know your thoughts in the comments down below. I'd love to know where your heads are at, but if I was looking to trade this thing right now, I'd be looking at maybe not the June 21st calls. I'd be looking at the June 28th calls, maybe coming down here a little bit more, maybe to the $30 strike, maybe the $28 strike, but you're going to have to pay a pretty penny, right? These are trading at $6 right now times 100, so $600 if you want to buy one contract, the $28 June 28th calls, which might be a little bit too steep. I don't know. What do you guys think? I mean, these are obviously very elevated over the past couple of weeks. It could be risky, but hey, if we get another wave of momentum, these could be printing money like no other. Printing money better than the Federal Reserve. Potentially, guys, potentially. So what do you think? Let me know your thoughts in the comments down below. And again, do not forget to hit the like button and to subscribe and get your free stocks from Moomoo. Up to 15 stocks, each up to $2,000, guys. You might as well do that. Link down below. The QR code's right here. And all you have to do is open up your account and fund it with at least $100. And if you don't like the platform, which I think you will, but if you don't, you can take out your $100 deposit and keep all your free stocks. So get on it, guys. Link down below, StocksAreFest.com/Moomoo. The QR code's right here. Get your stocks, and I'll catch you later.